I have a dream, that's all I need. I'll make it happen with some work and belief. Know what I want, so I'll take it on. I've made mistakes, but mistakes make you strong.
Oh, hello there!
It has been a long time since the last portfolio update, and I regret not doing an update sooner. I made a lot of changes to this portfolio, and contrary to my normal strategy, I have been trading a lot lately in this portfolio.
I said, wait a minute, wait a minute!
This public portfolio is one in about 9 portfolios I have, and I only use this one to underpin this YouTube channel and to put my money where my mouth is. During 2022, I had a lot of good opportunities and I needed to free up some cash and buy some of those for short-term gains. Yes, I actually do that once in a while. Even though I'm a growth investor and long-term holder at heart, I do trade sometimes when I see a good opportunity. In the end of 2023, I felt the need to do a proper cleanup and get rid of the lowest performers and concentrate on the companies with the best potential. And by cleaning up, I used the loss to offset the gains, so I had no taxes. So win-win, free up money tied in speculative losers and not paying any taxes on the gains. In this video, I'll do a short rundown of my public portfolio and what I have changed and why. I will also make some short comments on the different trades I did during the period. Some of them will really make you wonder. I won't go deep in every company.
What?
You are so shallow.
Well, it's a really good thing you can't go deep then, isn't it?
As I did that in the last portfolio updates, but I will tell you my reasoning for investing in them, my average cost, and even my exit price. As this is just one of my many portfolios, the strategy for this one is fairly simple. It's a growth portfolio with a dash of store of value and a little speculative too, but I'll get back to that. My total personal asset allocation is comprised of real estate, retirement accounts, stocks, some physical stuff like cars, boats, vacation home, and some cash. I keep my mandatory 6 months worth of expenses in cash, and I have a small extra amount too. In this portfolio, the sector allocation is not very diversified, but people who know me understand I don't believe in diversification. Just like Warren Buffett, Peter Lynch, Mark Cuban, diversification is for idiots, or said in another way, for people who don't have the time or want to spend time researching companies all the time.
Yeah, all that asset management, diversification, that's for idiots. Diversification, that's for idiots. Vacation, that's for idiots. Idiots.
I have my public portfolio in 3 buckets, so to say. I have my value, dividend. Not that I buy for the dividends, it's more a store of cash. So I use those to hold my cash. The speculative bucket, because I need to have something to play around with when all the other investments just compound over time. And then there's the growth part. This is where I place my investments in this decade and maybe longer. Please be aware that my public portfolio is highly volatile and can fluctuate a lot in a very short time. So these numbers can be different at the time you watch the video. Same goes for stock prices.
Okay.
I could retire at this point. However, I really like my day job as a data analyst for a large IT company. So I won't be retiring from my day job anytime soon. This portfolio is actually still in the beginning, as this portfolio is only around 7 years old, and it has never had more than 10 companies in it. I'm a firm believer in the good old Benjamin Graham, Warren Buffett, Peter Lynch saying, you need to know what you own and why you own it. And I'm not able to keep track of 50 plus companies constantly and keep up with all those financials. Also while researching new companies. And why would I?
We like to put a lot of money in things that we feel strongly about. And that gets back to the diversification question. We think diversification is, as practiced generally, makes very little sense for anyone that knows what they're doing. Diversification is a protection against ignorance. I mean, if you want to make sure that nothing bad happens to you relative to the market, you own everything. There's nothing wrong with that. I mean, that is a perfectly sound approach for somebody who does not feel they know how to analyze businesses. It's crazy to own 50 stocks or 40 stocks or 30 stocks probably, because there aren't that many wonderful businesses. And to have some super wonderful business and then put money in number 30 or 35 on your list of attractiveness and forego putting more money into number 1 just strikes Charlie and me as madness.
I urge you to see my video on diversification is for idiots, and you will see why I'm not diversified. But let's get into the portfolio and what happened since last update. Let's start with the portfolio as it looked last time. As you can see, there are 10 different companies, or should I say there were 10 different companies, and the observant viewer will see that Tesla is there twice. That's because I had a specific amount in Tesla that I already made ready to sell when it got overvalued again. But I'll get back to that. Let's look at each holding. Norwegian Air Shuttle, ticker NAS. It was 0.1% of the portfolio. Norwegian Air Shuttle was a highly speculative play, as they were about to go bankrupt. I actually speculated in that the Norwegian government wouldn't allow this and would bail them out. Ha! Sadly, this did not happen, and they're still alive, only a mere shadow of the former company, and the Norwegian government didn't do anything. So it was a speculative play. My cost basis was around $9. I sold at around $1. Yes, $1. So a loss of 90%. Huh. Luckily, this was an extremely small position, and sometimes speculative plays don't always pan out. I bought NAS back in March 2020, I think, when everything collapsed, and I sold again to offset some taxes on other gains. And, just as Warren Buffett always said, I have learned my lessons. I will never invest in an airline again. Polestar, 0.1% of the portfolio. Polestar is actually a company I really like.
Well, duh.
They have a great pedigree with their roots in racing. They were originally the racing division of Volvo, and fortunately, or maybe unfortunately, they were a part of the deal when the Chinese company Geely bought Volvo. I'm convinced that Polestar is going to come back at some point. My cost basis is around $4. The share price today is around $1.60, so I'm down around 60%. I still believe in the company. It's just going to take more than 5 years before I get my money back. This was also a kind of a speculative play, and I don't mind waiting for this one to pay off. They are ramping up in the US, and with the new models, they will probably do well in Europe too. However, their biggest competitor is Tesla, and maybe the other Chinese EV manufacturers. But now, Polestar have said they will move into the niche player in high-end cars. They won't go rummaging around down in the low end. This could hopefully give them the margin they need. I still believe there's a market for this luxury car with a sporty look, but let's see. Anyways, it's only 0.1% of the portfolio, so it really doesn't matter in the big picture. Meta, Facebook, 0.8% of portfolio. Meta, Facebook was one of my core stocks, but I grew more and more weary of Mark Zuckerberg's relentless focus on the metaverse and his belief in that. The enormous amount of cash that they piled into this, I just couldn't see myself holding on to that company anymore. And, of course, with the 2020 hindsight, this was a bad time to sell. I should have held on. But at that time, no one could know that Meta would drop the metaverse investments and focus on AI. The stock price was falling like a rock, and management didn't seem to want to change course. Logically, it was a good decision to sell. My cost basis was around $195, and I sold around $190, so I took a small loss around 3%. I sold because of lack of confidence in the company and the leadership, also because I needed the money to buy something else. As I remember, that was when I bought some more Tesla. I also bought some Proterra, some Google. I'll get back to that. Proterra, 0.9% of the portfolio. Proterra was another speculative play. They were a new hydrogen and battery company, and they would take existing Class 8 trucks and the likes and convert them to hydrogen or electric. I had high hopes on that company, as they looked a lot better than Nikola. Wonder why. And I thought they would do very well. Unfortunately, they kinda ran out of money and talent. I lost confidence long before they went belly up, but again, speculative plays are just that, speculative plays, and they sometimes don't work. My cost basis was around $13. I sold at $4. Ugh. Yeah, talk about a loss. But remember, this was still a very small position, and if you have 10 speculative plays, just 1 or 2 need to hit a home run for it to be a good deal. Rio Tinto, ticker symbol RIO, 1.2% of the portfolio. Rio Tinto is actually a great mining company. If you want to know more about them, see my last video on the portfolio update, where I go deeper in their TAM and financials. I also have them in my dividend portfolio, and I'm quite happy holding them forever. I'll make a video on that dividend portfolio very soon. My cost basis was around $66. I sold at $63. So, theoretically, I lost 4.5%, but I got almost 12% in dividends in the time I had the stock. So, win-win. And as I said, I use some of those dividend stocks as a store of value. Google, ticker symbol GOOG, 1.8% of the portfolio. Google needs no introduction or anything. Needless to say, I liked Google a lot, and the only reason I had for selling was that their growth rate was declining. It wasn't as high as I expected, and in a few years, that may look different, but seeing how this AI boom is playing out, with a new so-called winner every week, I will be switching these tech stocks out with the great Vanguard VGT ETF instead. More on that in the conclusion. My Google cost basis was around $113, and I sold at $91, so I lost 20%. Not so funny. But again, I needed the money for other investments, and I learned my lesson from Meta, that even the great companies can suddenly lose a lot of value just because of sentiment or another shiny new object. And again, Tesla is my highest conviction company, and I plan to have around 2,000 shares before 2030, so Google had to go. Danske Bank, DNSKF, 5.8% of the portfolio. This is a great company. It's a Danish bank, it's almost 6% of the portfolio, and a core stock I will be adding to and keeping for some time. Although, if Tesla drops below 150, I will sell it and back up the truck and load up on Tesla stock. If you want to know more about this company, see the first video on the portfolio update in the link in the description. The potential for Danske Bank is great, and now with dividends too, this is a nice holding, growth and dividends. My cost basis is around $12, the price today is around $30, so I'm currently up around 140%. I get dividends twice a year. Currently the dividend yield is almost 7%. I bought in early, I have a dividend yield of around 10%, and I usually don't like banks that much, but this one has had a lot of bad press, some scandals, etc., and I'm sure they will reach their former glory again, and that would probably be my trigger to sell. Until then, 140% gain in 5 years, not counting the dividends, is okay. And with almost 5%, 6% of the portfolio, that's a nice amount. PepsiCo, ticker symbol PEP, 4.6% of portfolio. Pepsi was one of my core holdings, and it wasn't because of any particular reason I sold, except I estimated the growth to be small over the coming years, and the dividend was too low to be a dividend company. And I would like to have some cash for something else. So I sold it back in December 2023, and also because they did the major cleanup at the time, I sold all the losers, and those offset the gains from Pepsi. My cost basis was around $137. I sold at around $170, so a gain of 25%, not counting all the dividends I got over time. As Pepsi was around 5% of the portfolio, that was enough to offset the losers. I'm currently building a dividend portfolio, which will be my main portfolio in retirement. But I don't think I'll put Pepsi back in. even if it's both growing and paying dividends. So I think this is a goodbye to Pepsi. Microsoft, ticker symbol MSFT, 8.4% of the portfolio. Microsoft, what can I say? This company has had an incredible history and it just keeps on going. With a large market share, great products and services, great management, and a fast-moving pace, Microsoft has long been a part of all my portfolios. Unfortunately, I took some gains just before the COVID crash, which was maybe a mistake, as I never bought those shares back. Even though I made a lot of profit on the companies I bought back then. My cost basis is around $159, and the current price is around $423. So I'm currently up, 165%? Microsoft is already a fairly large part of this and my other portfolios, so I will only add to it if the stock dips a lot. Tesla, TSLA, 77% of the portfolio. Yeah, Tesla is by far the largest position in both this portfolio and almost all my other portfolios. In this portfolio, I have around 1,400 shares, and my goal is to have 2,000 shares before 2030 combined. That should not be a problem, although I'm also building my dividend portfolio, so let's see. I will actually make a video on this soon, as it's quite interesting, this growth versus dividend mindset and how I'm supposed to live in retirement, especially with the volatility in Tesla. I must admit, I've been trading Tesla a lot lately. Stupid! When the stock was around 280, I sold around 100 shares, and I put some of those in Rio Tinto and Realty Income as a store of value, as I didn't believe those would fall much in share price, and I get dividends while I was waiting for Tesla to drop again. I bought the 100 Tesla shares back around 165, so a nice little play there.
I like this one.
Tesla always drops after Q1 deliveries, so it seems someone else is doing the same every year, every quarter, pumping the stock up slowly just before and dumping it all just after. In this portfolio, my cost basis for Tesla is around $77, and the current price is around $168, so I'm up around 128%. As I said in my last video, it won't be long before the share price will be $300, and in 2030 or 32, I believe we will have a share price of at least $1,500, maybe even $2,000 a share. Don't believe me? Let's wait and see. Tesla is a great company, and I have a high conviction it will be one of the most profitable companies on earth. And if it hasn't been split up by government by 2050, it'll be #1 company in the world. I urge you to see the movie I, Robot and see what happens when one company owns the total labor force. Yes, Tesla is a bumpy ride, but I don't mind that at all. I have seen the portfolio lose as much as 50,000 in a few days, but I have also seen it rise a lot. I'm patient and believe in Elon Musk and his determination to move the world to a sustainable future, and eventually for us humans to become a multi-planet species. I hope it happens in my lifetime, as this has been a dream of mine since I started watching Star Trek as a young boy. Humans becoming a space-faring civilization. Think about it. Recap, conclusion. So, my public portfolio right now is only 5 different companies. Tesla with 77%, Microsoft 8.5%, Danske Bank 5.8%, Realty Income with around 4.9%. This is just for storing cash until I need the cash and giving me some nice dividends in the meantime. On paper, it looks like I'm down 7% on Realty Income, but in reality, I'm about 0 because I've gotten dividends in over a year now. Polestar is the last one with 0.7%. The rest is cash and sitting and waiting. This is my public portfolio right now. I'm still a bit cash heavy for the moment, as I still believe everything is a bit high right now, maybe except Tesla. And I believe we're looking at a downturn during 2024. But hey, I also thought that in 2023. In this portfolio, was using RIO and also O as a store of value. I was banking on the dividends and that the stock prices wouldn't drop a lot. So basically just keeping up with inflation and being ready when I needed the money for some quick buys. I have now realized this is a somewhat dangerous game and have moved my store of value into a Vanguard money market fund instead. I use VMFXX, Vanguard Federal Money Market Fund. It pays a bit over 5% and has an expense ratio of 0.11%. It's almost as secure as any bank and pays out more in interest. So, it's an easy way to have cash equivalents. During my day job, I see how the economics work in my customers, and it seems like we're looking at a pullback sometime 2024. Maybe in Q2, maybe Q3, but definitely Q4. So I want to keep a lot of cash at hand. On that note, I'll end this video. Please leave a like to help others find my videos. Remember to invest in you. The more you learn, the more you earn. Bye.
I have a dream, that's all I need. I'll make it happen with some work and belief. Know what I want, so I'll take it on. I've made mistakes, but mistakes make you strong. Let's break it down for a minute. I want the crown, I'm gon' get it. You hear me loud, man, I'm winning. Yeah, Charlie Sheen will be grinning. These ladies know that I'm sinning, and this is just the beginning. I'm closing in the ninth inning, there ain't no point in resisting.